First of all, I'd like to say good morning and to thank everybody on the webcast for attending our session on the introduction of e-invoicing to Saudi Arabia. We have a distinguished team of presenters for you. We have Mohammed Araji, who's the head of our Tax Reimagined practice, which looks at primarily how we can view the management of taxation on an enterprise level in a new way, given so many changes to the tax landscape over the last decade. We have Katya, who is our transaction tax systems lead for indirect taxes based out of the US. And so Katya has stayed up especially late for us, so we do appreciate that. Thank you, Katya. Julie Laplante, who is our head of indirect tax technology in our region. All of them have got lots of experience in terms of tax operating models and e-invoicing. And lastly, me, who's the head of indirect tax for Saudi Arabia. Can we move on, please? Thank you. So I thought it'd be a good idea just to take you through the agenda quickly. I'll just do a bit of setting the scene to give a little context in terms of why e-invoicing is being adopted now in Saudi. Julie will go into more detail about exactly what e-invoicing is and the mechanisms for a data exchange, which is obviously a key part of the process. Mo will talk about the impact of the change on processing and data management, which is, we think, often overlooked in terms of understanding the implications of this type of change. Katya will talk about how we approach e-invoicing assignments, implementations, and she'll give some sense of her experience, which is in several areas of the globe: Latin America, Europe, North America, where she's been intimately involved in implementation of e-invoicing. So she will share some really interesting insights with us. And then what next? Because it's okay to have these presentations, but the $64,000 question is always, okay, so what do we do now? And then we'll host a Q&A for the last 20 minutes or so, when you'll, as Claire said, you'll have the opportunity to ask as many questions as possible, and we'll do our best to answer that. Can we move on, please, Claire? So, as I said, setting the scene. Next slide, please, Claire. Thank you. Just in broad terms, we know the regulations for Saudi were finalized on the 4th of December last year, with an implementation date for the 4th of December this year. And we also know that a lot of the reason behind this is because there's a need to formalize more and regularize more the invoicing and essentially tax collection and tax efficiency with which VAT specifically is managed in the kingdom. This is part of a trend. The OECD in 2019 issued a paper which is on the back of the BEPS initiatives, which basically outlined a kind of a digital pathway to improving tax collection and improving the efficiency of tax systems. So what Saudi is doing is essentially falling into line with the global initiative of e-invoicing being critical to managing taxation. A couple of distinguishing features of the Saudi approach is, at the moment, we don't have any distinction between the size of taxpayer that has to implement the invoicing. What we do know is that every VAT registered resident taxpayer has to implement. Now you can imagine, depending on your size, whether you're a small, medium or large enterprise, that will have different implications from a cost point of view. There's no distinction between whether it only applies to B2B or B2C or even B2G. And that's quite important, because for each one of those categories of market, the implications are very, very different. As you can imagine, trying to collect data on your retail customers that you've never collected before to ensure e-invoicing is operable, it will be a tall order. What we're hoping and what we expect is that Gazette will introduce additional regulations and guidelines by the middle of May, as they promised, and hopefully that will give us a lot more detail in terms of specifically who will be required to implement by the end of this year, and who may get a pass temporarily, I would imagine, until sometime maybe early next year. Most or many countries globally have e-invoicing systems. Most of the EU has e-invoicing, mainly for B2G, but other countries obviously have it for B2B and B2C. But globally, we're looking at outside the EU. The US has it for government procurement, Australia, Brazil, Mexico, Colombia, Singapore. Some of it's mandatory and some of it's not. But clearly there's a trend here. I've forgotten India. Apologies. India also has it, and this trend is obviously not going to go away. Can we move on, please? Okay. So just real quick, there are kind of two key models, and once I finish my section, Julie will go into more depth. And really, you're looking at a post-audit acquisition of data by the tax authorities, or what we call clearance. Post-audit data exchange normally takes place once the return is submitted. You send a file by whatever method is required, and the authority will then review the file, and if there are any queries, they'll come back to you with some form of report, and you've got to obviously answer those queries. The other common method is a clearance method, which is a lot more intrusive in the sense that before you can issue the invoice, it has to be validated by the tax authority. And that's normally on a syntax level, which is just invoice details. But clearly, what that means is the tax authorities have an awful lot of additional information about your business. And in some cases, they may send you the return before you submit. So we're going to go through the presentation and take you through in more detail what this means for the taxpayers. But I thought I would, as I said, set the scene, give it some context, and then hand over to the rest of the team to take you through more detail. So Julie, over to you. Thank you.
Thank you, Nick. Sorry. Yes. So good morning, everyone. Before we dive into the e-invoicing itself, let's first have a look at the invoice and why is it important for VAT. In the majority of VAT jurisdictions, it is actually the VAT legislation that prescribes what are the mandatory requirements for the invoice. And why? Because the invoice is the primary document that captures the tax liability of the supplier. But also, it's the same document that actually gives the recovery rights for the buyer. So in the old days, when I was just starting my VAT career back in the Netherlands, actually the companies had to present original paper invoices to the administration in order to get their input tax refund. And the authorities were had their special way of marking those invoices to prevent double recovery. So these are obviously things from the past, and with the move for digitalization, this is where the concept of the e-invoice is coming in. So what is the difference between paper invoice and an e-invoice? So the next slide shows some standard requirements and characteristics of the e-invoice. First of all, it is the layout and the format of the information that is being exchanged. So what are the mandatory fields that need to be included, and what is the technical format of the message that will be exchanged? That predefined mandatory fields that is also referred to as the schema, and the technical format that is commonly being used is, for example, XML or SCV, but it's those things differ per country, and that will actually be something that will need to be seen what exactly the format will be that will be used in Saudi. So the second important element of e-invoicing is ensuring the authenticity and integrity of the message that is being exchanged. So am I getting the information from the correct party? And is all the information that is included in that message genuine? So how do we ensure that? By applying so-called authentications. And there are different levels of security that you could apply, which is basically the so-called electronic signatures. The two most commonly used are either advanced or a certified electronic signature. Advanced one basically requires a key or certificate to be linked to the person that is applying that signature. The difference with the certified electronic signature is that the second one is more secure because it requires authentication via a third party. So that actually means that the message will first go to another party that will see, is the message coming from the person who is supposed to be sending that message, and does it have all the data that is should be there? Can that data be verified for its integrity? And only then the certified signature is applied. So finally, what is the third element is that we have our data, we secured its authenticity. So now we need to transmit it from the seller to the buyer. So this is where you will find the most variety of differences applicable in different jurisdictions. It can be as simple as an email, or it can be as complex as having linked systems, system connections like EDI. So if we look back at these three elements, where they seem to be logical from the process perspective, the complexity is mainly in how do those different variations come together in the legislation. And when we see all these combinations together, it mostly creates a unique combination of its own sort. This poses challenges for the companies operating globally, as it is very hard to find a solution that fits all the countries and that ensures that the solution is flexible enough to adapt from country to country. Further on, Katya will explain how companies deal with this in global environment. So, but for now, we know that KSA will not give the choice, but it will be a requirement to comply with electronic invoicing. So the next question that we want to look at, is it really only a burden that is being pushed on the business by the tax administration, or can we find also some benefits to it? And we've listed here some of typical business benefits that the e-invoicing will bring you. These are mainly in the processing efficiencies that you will be able to realize once e-invoicing is introduced. Because the invoicing will require further automation, obviously there will be no need for printing or physical storage, but because of the further automation, it means that you will need less training, there will be more efficient use of your resources, and hopefully all of this will result in a quicker processing time. But of course, those benefits will come at a certain cost. So next to the technical implementation challenges that I've just mentioned, I would like to specifically point out one thing that we see in particular happening in a lot of countries. Once the authorities get sight of your data, they will want more. This is what typically happens, that the authorities first give you a set of mandatory requirements, but they tend to extend the schema of E-Invoice to get richer and richer data so that they can do more analysis on it. And with that, once you give them the data, the more you give, the more secure you will need to be that the data that you are giving is correct and compliant. That in itself changes the way that your tax function within your organization is going to be operating. And in his part, Mo will further elaborate on this point. But to go back to the general overview of e-invoicing, the next slide shows us some of the key players, or actually the three key players in the e-invoicing concept. So in the center of this stands the seller. So he is the one who is delivering the goods and the service, and is legally required to issue the invoice and apply the correct tax. The buyer involvement will all depend on what the e-invoicing process scope will be. As Nick has mentioned, for now, what we understand is that Saudi will apply e-invoicing to all of the types of transactions, be it B2B, B2C, government transactions, and even export transactions. They are specifically marked as also relevant for e-invoicing, which means that all type of buyers will need to get involved, because all of them need to be able to receive that electronic invoice, being able to open it, to read it, and to verify that they have received that message from the party who was supposed to send it to them. And then the third and very important party in that process is, of course, the tax authority. Their involvement will very much depend on the model that the authorities will choose. As Nick mentioned, the two most common models are either post-audit or the clearance model. In post-audit model, the authority has a less of a role, because they merely receive the information after the fact, and then they have all the possibilities to interrogate the data, review, and give back their feedback in sort of questions. Whereas when we move to the clearance model, the authorities will have more of a real-time role in the process. The next slide shows how exactly the process will flow. And again, if we start from the seller, and the first process, of course, will be that the goods or services are delivered. So that's our line going to the left on the bottom. But then, depending on the model, we will either, in the post-audit model, will actually go from the seller directly to the left, to the buyer, with the e-invoicing message. And the transactional data that line to the right, to the administration, will only be sent in a summary format, maybe at the end of the month, on a weekly basis, as it is being done in Spain. But in the in the clearance model, we will actually see that the seller will first send the transactional data to the administration, so that the error will first move to the right. Then the tax administration will do the validation and approval of that message. and then send back the message to the seller to actually approve that e-invoicing message. And only after that approval, that's when the seller will be able to release the e-invoice to the buyer. So in the clearance model, it is very important that the data is exchanged in real time, that the seller also has an ability to receive back the message from the tax administration, because all of that processing time is important to get the message to the buyer. And imagine that when you are in a retail situation where your customer is standing at your cash register, all of that needs to happen in the back end. And it's very important that all of the data is flowing through and that there are no gaps, that the tax administration will actually approve your message before while your customer is standing in front of you. So with that, hopefully this gives you a bit of an overview of how the e-invoicing, what is the concept, and how does that flow through in terms of the process. And now I give it to Mo to take you further in the implications for your organization.
Thank you, Julie, and hi everyone. Just two quick questions that came up in the discussion. What's the deadline for the implementation? That as of today, it's December 4th, 2021. Businesses should be ready to issue e-invoices. And there was a question before that about the risk of e-invoicing if the business is not set up. We'll cover that in the section in the next few slides. So let's take a step back and look at the process involving e-invoicing. So if we took a bird's eye view, today as it stands, the government receives summaries from you. Those summaries are for the transactions of the month or the quarter or the reported period. If they audit you, then they will get a sense of what that summary, the details of that summary are. If they don't get to see it. Post e-invoicing, the government will actually know every transaction, and if we're talking in a clearing system, they will know it real time. And the equation will be reversed. Instead of you sending them a summary, they may send you the return for you to clarify. So in other words, it will be, they will be doing a reconciliation on your behalf, a return. They send it to you, you look at it, you approve, you agree with the numbers, you make the payment. So it's the e-invoicing is the process of transmitting data from you to the government, where you are the owner of the details today. Post e-invoicing, you will be the owner of that data, and then you will transmit the same data, and Gazette will be owner of another copy of that data, and they will get it real time in a clearance in a clearing mode. So without any doubt, e-invoicing is a disruptive new regulation that is being introduced. It will disrupt the way you collect and handle your data, how you prepare your invoices from this data, and as previously mentioned, the right data. This is the riskiest part. Are you submitting the right data to the government? And when are you sharing, and how fast do they know about it? So let's start with the data. So your invoicing process starts with the data. It starts with your source data, your master data. What do you have in your files? In an ideal world, in the perfect world, all CFOs would hope that all their data sits in one ERP. But unfortunately, we don't live in that perfect world. We live in the real world, where data is all over the place, across multiple systems, multiple ERPs, connected by other softwares, and that what brings the complexity and intensifies the complexity of this process. But in both worlds, the perfect world and the real world, once Gazette meaning the General Authority for Zakat and Tax in the Kingdom, the tax authority, once they issue the regulations and they publish the schema, which is the set of data that they want to collect from every business in every invoice, then you need to take that data, do a diagnostic on your ERPs, on your systems, and see what of that data do you currently have? Where do you host it? Do you extract it? Are you able to get it easily or not? What's missing from that data? On the other side, you might figure out, or you might find out that some of the data that you already have and you've never used might be relevant for the e-invoicing. All that remains to be seen and dependent on the assessment that you do. So there are a lot of factors that come in place. How many ERPs do you have? How many systems are you dealing with? What's your industry? Where do you get your data from? How is it imported, or how is it registered in your systems? Whether you're missing a lot of data or some of the data remains to be seen once you take that set of schema, set of data published by the tax authority, and map that to what you have and figure out what's missing. And then, of course, you will realize that some of the information is missing because there's a new regulation that's being issued mandating a new set of information that you have to have, document, archive, and share. So if we move on to the next slide, this is a set of schema mandatory. Sorry, I should have mentioned that the schema can come in two formats. It can be a mandatory or an optional data element that you include in your invoice. As you can see on the screen, this is a set of items. We might have more of these items published by Gazette, but these are mainly across the globe are the common mandatory data elements that you need to include. Your company name, your tax ID, the period, the cycle, invoice number, customer ID, shipping to customer, shipping to address, sold, all of these, what you normally see on your current invoice, in addition to other requirements that will be part of the e-invoice. So step one is to wait for the, step one is to take the schema that will be published by the Gazette and cross-reference that to your ERPs and understand what do you have and what you're missing. After you're done with that exercise, you will need to come up with a plan that will help you bridge the gap in the data elements that are missing. So let's say Gazette will publish 50 data elements, 50 things to be included in the invoice. And you have 35 or 40 or 48 or 28, all that is depending on your ERPs and on your systems. Then you need to bridge that gap. You may need to go to your clients, collect more data. You may need to look within your other systems that you have, whether connected or not to the ERP, and see whether you have that data. Then you need to see where do you host it. If you're going to collect a new data, and apologies, Claire, if you can move on to the next slide, please. So you need to know where you host it, where you save it, and does it fit your extraction cycle or extraction transactions in order to prepare an e-invoice. In the future, this means that you will change the way you onboard your new clients. You will update your current clients with the missing data that's there, with the missing data, and it will change the way you host the data and the way you extract it. This, in summary, means that there is a transformation or a change to your invoicing process. So now that you have collected all the data, so we did the assessment, we figured out what's missing, and now we collected the additional data. Now we have to see how we're going to process it. So now that we have collected, we need to prepare it in a format that will match the schema, the landscape that the Gazette will issue. And that should be in a specified format, so we're able to convert it into whatever language that the government will require. Let's take, for example, the XML. So XML is probably the most common used language for tax information transmittal from taxpayers to governments. So today, to prepare the invoice, you follow your own process, a certain process, whether documented or not, but you issue your invoices in a certain way. in between. E-invoicing will force or will mandate is change. And the magnitude of that change depends on your process and the amount of data that you have. It will mandate a change to this process. So preparing that e-invoice or that e-invoice data file to be ready to be transmitted brings its own challenges. This means you have to have it, you have to have all the data in that file, all the data required. It has to be converted to XML, it has to be validated, it has to be submitted to the tax authority, whether directly or through an e-invoice provider. And my colleague Katya will talk more about this. And then once that gets approved, it will be submitted to the customers. Having said this, in a clearing model, as we think this will be in the kingdom, Gazette controls what you how frequent you invoice, because they have to invoice they have to approve every invoice that you issue. So if I'm your customer, you're invoicing me, unless Gazette in the middle approving that invoice you're raising, I will not get it. So this is a critical point to have this piece of the process set up, validated, tested, up and running. Yeah,
it's Nick here. Can we just talk a little bit about governance before we move on to Katya? Because I think that's a really important part of.
Yeah, I'm coming up to that, Nick. So how do you prepare that data? That solution or the solution to prepare that data can range from being easy. You have a really nice and advanced ERP that requires small changes for the additional data that you need to issue e-invoices. And it can range to all the way introducing new technology, new software that will allow you to extract from multiple systems, multiple resources or files or servers, and help you shape that file. Example of softwares like this, and this by no means is an endorsement, is Alteryx and the software that do the functionalities of Alteryx. So passing that step, you have the file ready. Now it has to be converted to XML, for example, validated, submitted, approved, and then shared with the customer. Okay, I'm being given a note on time. So by now that you have collected the data and prepared the file, now we need to push it to the government. This can be either done, has to be done through an e-invoice provider. Whether we will have multiple e-invoice providers or a single e-invoice provider or the government itself remains to be seen. And also my colleague Katya will go further into this. If there are multiple e-invoice providers, that adds an extra step to your implementation process, which is figuring out which one of those e-invoice providers or generators is most suitable and compatible with your systems and process. So now back to your file, it will go to the certified e-provider, e-invoice provider, or then to the government. Then that will be approved or rejected, bounced back, corrected, submitted again. Once it's approved, you will be notified, you will be given a reference, and then it will be shared with your client. That transaction has to be digitally protected, signed, stamped. Also, we will see that in the next few minutes. What does that mean? Now, tax compliance obligations do not end by the issuance of the e-invoice and delivering it to the customer. There are a lot of work through it, after it, and around it. Digital archiving, record keeping, retention periods, XML or other types of language. How do you store it, for how long? And as part of your process transformation, you will need to map every invoice that you issue with the confirmation that you receive from the government and link those together, because if you're asked about them later on, you should be able to find that invoice and through that reference and so on and so forth. As Katya mentioned, as Julie mentioned, as Nick mentioned, e-invoicing opens a whole new horizon to what tax authorities know and when they know it and how they analyze that data. So you will be, your data will be analyzed, maybe real time. There will be some data mining to combat tax evasion, to cross-reference invoicing, to cross-reference numbers between vendors. All of that information will be done, will be available to Gazette. All those analytics will be done. So this introduction of these new regulations, the E-Invoice regulation, will change the way you capture data. What do you capture? Where do you host it? How do you extract it? And most critically, it will also change the way you view tax compliance and the way you manage your tax risks. Initially, you send a summary. Now you send them everything. So your tolerance to tax risk will change. Your governance around tax compliance will change. All of these are things that you need to be aware of. And without any further ado, and I apologize for going over time on my section, I will hand it over to my colleague Katya so she can take us further into the details of e-invoicing and a case study that she recently went through. Katya, over to you.
Thank you so much, Mohammed. Hi, everyone. So we're going to be talking about the Kpmg approach. Kpmg has been helping clients with the deployment of local, regional, and global solutions. So Kpmg's methodology has a tendency to be holistic, robust, and flexible. We start with a strategic plan. The strategic plan will be mainly based on the type of electronic invoicing solution that is needed. There may be legal entities that are only established locally in one single country, so that would be a local approach. But what if you have a regional tax footprint or a global tax footprint, right? So those are the main things that need to be taken under consideration. And based on that, then the strategic model will start taking shape, right? So once we have that kind of foundation, usually the strategic plan is composed of a roadmap, right? And a technology plan, right? It's only logical if the tax administration is relying in new technology to get access to the taxpayers' data. The taxpayers should be prepared to implement, right, a tax technology plan to match the tax administration requirements. And so based on that, we start the strategic plan. The strategic plan also needs to be focused on the people, right? Who are the teams that's going to be impacted? It wouldn't be only the tax department, right? Could be maybe the financial department. We consider that any electronic invoicing solution should be a corporate mandate or a corporate governance, right? So once you have your strategic model in place, then we move to the design level. So the design is composed of the high level design. That's your skeleton, right? What type of systems will be in place? How many ERPs do we have? Do we have procurement billing systems, right? That could be impacted. And then we go into the detailed design. Once we select a selection, right, through the vendor or solution selection process, what type of interfaces are going to be in place? There needs to be a mapping exercise, a data mapping exercise, as Mohammed was explaining, right? We need to make sure that we have all the master data available to comply with the electronic invoicing requirements. And that's part of the build phase, right? After the build phase, there needs to be some testing of the data, testing of the interface, testing of the functionality and the solution that has been put in place, followed by an implementation, right, to deploy the solution. And then it doesn't stop there. The process continues. You need to continue monitoring, continue improving, tuning in the solution, right? And in order to do that, it's required, right, by the new technology that is implementing by the tax administration, the use of a smart technology, right? A smart technology that could assist in managing and support the business more efficiently, right? And as Mohammed said, it doesn't stop there, right? Its governance is super important, and also the implementation of data analytics, data visualization, and smart reports. If we move to the next slide. The next slide, we have a brief summary of electronic invoicing and tax technology approach. So everything starts as we were talking before with master data extract. This could be a pain point for most of our clients, especially if there are multiple ERPs involved. Kpmg is currently relying with in-house custom-built tools that can automate the data extract of ERP and other systems. Once the data is extracted, right, we're going to analyze the current state of the master data. For that, we will need some kind of data manipulation tools, right? We're going to analyze the data, and we can put it in a visually friendly format, right? And if there are repetitive processes, let's say that we have several legacy systems, or we have several billing systems or performance systems, in addition to the ERP, we can use some kind of automated processes via RPA. And of course, Excel is just a basic data manipulation tool that can be available as well. But what happens if we have several systems? If the data is coming from different sources, right? Then we can start thinking on data warehouses, for example, where we can compile, summarize, centralize all the master data that we will need for the electronic invoicing. Once we have that baseline in place, there is the electronic invoice platform. The electronic invoice platform, regardless if it's a local, regional, or global solution, it needs to have a smart interface. You can have a super fancy solution that can give you a lot of functionalities, but if that solution, let's say, is focused or only interfaces with SAP ERPs and you're in Oracle, that's going to be not use to you. Right? So once we have that, one of the pain points that we have seen with clients once the electronic invoicing has been implemented in the country is that electronic invoicing reconciliation becomes a part or an additional step of the compliance process. As we were mentioning before, right, once the tax administration has access to the electronic invoicing data, we need to make sure that we have a reconciliation process in place to reconcile our electronic invoicing data with our system, financial systems, ERPs data as well, right? So finally, we need to put an electronic invoice roadmap in a plan, right? So once the tax administration start releasing or approving these new requirements, it doesn't stop with only electronic invoices, right? What happens if you need to cancel an invoice, or you need to modify it, or if you need to issue a credit note or debit note? What about transport notes, right? What about cancellation of documents? What about discounts, et cetera, et cetera? All this should be part of the strategic planning. So if we can move on. Okay, I'm not going to go into many details on this, but the main electronic invoicing implementation baseline, right? As I was saying, it can be divided in a global or regional strategy or in a local solution. So local solution is ideal if it's only, you know, one or a couple of legal entities that are only located in one single country or Saudi Arabia, right? So you can adopt a local solution. And that's going to be fine, right? But if the legal entity has subsidiaries in another country or other jurisdiction, then a local solution is not going to be scalable, right? And it will have a high system impact because every country has different requirements, right? So then a global or a regional strategy would be more accurate and adequate for that legal entity. Can we move on to the next slide, please? Thank you. So this is an example of the key consideration and the key factors that we take, that we consider, right, when we are trying to select a vendor or an electronic invoicing solution. This is some things that we usually consider with our clients that have a global footprint, right? Or they have legal entities in more than one country. First of all, technological capabilities, right? The vendors need to demonstrate that they have the capabilities, right? Not only the immediate to fulfill the immediate need, which is the issuance of the electronic invoicing, but long-term, right? They need to have a robust infrastructure. Secondly, the operability model. What does that mean? Well, if I have multiple systems, as I was saying, multiple ERPs, we need to make sure that this solution will take the data in the format that I can extract it from my systems, right? And that there is an interface to not only push data, right, to that solution, but sometimes if I need, for example, an UUID for my invoices after have been approved by the tax administration, I need to make sure that that interface allows for that data to push back to my systems. One of the most important things is data security. The vendor should demonstrate that have the capabilities and the functionality to manage, to store, and to have a policy for data security in place, right? And lastly, knowledge and expertise, right? Electronic invoicing is something new in Saudi Arabia. There will be a lot of solutions. We need to make sure, we need to do our due diligence, right? We need to make sure that the solution and the vendor that we select has the expertise to fulfill the requirements that will be put in place, right? And finally, the support model, right? What if something happens? What if the solution, goes down? Where is the support? If it's 24/7, is it in the country? Is it in a shared service somewhere else? What kind of language capabilities they have, right? All those things are things that need to be taken under consideration. Can we move on, please? This is just an example of a scorecard for a vendor or electronic invoicing solution, right? So you will see in the first column is the functionality. You can have several factors there to analyze. We always recommend our clients to select a minimum of 3 vendors and make sure that you're going to compare apples to apples, right? Under the vendor 1 to 3, you will see A, B, C, D, E. That could be the countries, right? If you have a legal entity with multiple subsidiaries in other countries or several legal entities in other jurisdictions, that's the way that we would do it. And I think I have one more slide, Claire, after this one. Yeah, perfect. So yeah, that would be great if we can stay on this one. So this is just briefly a case study, right? So this is a recent deployment, actually, one of the latest one. Our client is in the entertainment industry and decided to launch streaming services in 5 different countries. And those countries required electronic invoicing clearance methods. So that means real time. That means that the electronic invoice goes directly to the tax administration, and in seconds or minutes, you get the response back, right? So how Kpmg assisted? Well, first of all, we coordinated with the tax team, right, on the client side, and we did a requirements traceability matrix, right, to analyze and document the tax treatment of the services that will be provided in each of the jurisdictions. Then we documented the electronic invoicing requirements, the technical aspects, the data mapping, and what the legislation establishes with required and optional fields depending on the needs of the client, and also the reporting requirements. In 3 of these countries, the tax returns, right, were digital tax returns. So that was a huge impact for the client systems. And then the next step was the development of a plan for an electronic invoicing vendor selection, right? We use a scorecard similar to the one that I showed before. And then once the vendor was selected, we supported an electronic invoicing solution implementation. We provided tax technical guidance, right? And we were heavily involved in the testing scripts of this solution, right? And this was in collaboration with the client tax team. This client actually went a step forward to implementing a tax technology plan. They are now deploying actually a tax engine, a global tax engine as well, and they're automating their compliance process. I will stop right there. I think, Nick, you have some final comments.
Thank you, Katja. Just to quickly go over what we consider to be the next steps, I'm pretty sure many of you on the call are trying to figure out what to do next. I think, as Katja pointed out, some form of business and tax process review in terms of how you invoice at the moment is really important. You need to understand whether or not you have the data available in your master data, which is required for e-invoicing. I think the schema we put up earlier on was just a kind of basic minimum in terms of data requirements, but we're expecting potentially that Gazette will ask for more. There's a need to understand whether or not you've got a gap in your data requirements and how you plug that gap. Some of you may decide that it's not worth going beyond the immediate requirement, which is fair enough, but we would caution that, as Katja said, it's only the beginning, and therefore building additional capability into your ERP is going to be, or your data, master data files are going to be really important, so that you can keep up with all the requests that come forward. The mapping, the vendor selection, these all come post initial assessment, but we believe that that's the first step. Next slide, please. Timing is going to be really important. We are of the view, based on our experience, and obviously this is a more complex environment, you're looking at least 8 to 10 weeks overall to test and go live. And bearing in mind the date of implementation by law is currently the 4th of December. If you go back a couple of months, you're already at the beginning of October. You've got Ramadan, 2 Eids, and we all know that certainly in Saudi there's a big chunk of the year which kind of disappears almost in terms of the ability to execute. So we're looking at really starting the assessments as early as possible, so at least you know which direction you would want to go. So this would be our recommendation. So apologies for running over. We'll just keep going for another 10 minutes in terms of questions. Can we have the next slide, please, Claire? I've got a couple of questions that are already being asked, and we'll try and answer them. I think the question about business risk was already asked. Just to reiterate Mo's point. Yes, it will present a risk, and the biggest risk is if you haven't implemented e-invoicing by the deadline, you're subject to potential fines and penalties from Gazette, which is a business risk depending on the size of those sanctions. But there's also an inability potentially to do business where your customer will not accept anything other than an electronic invoice, which means there may be issues in terms of transacting. I've got a point here for Katja and for Julie. Maybe either one of you can answer this. One of the questions here was, what are the major IT challenges that we've come across when implementing e-invoicing in other jurisdictions?
I think I've seen a couple of questions on that. I think the major complexity comes when people operate multiple systems where they have their invoicing in different either POS systems or multiple ERPs operating next to each other, because essentially then per system you would need to be able to extract the data and make sure that you push all of that together into one schema that will then generate your e-invoice. So I think the analysis of your current system landscape and also looking at your current master data, how good is your master data, that will determine whether you are ready or not ready to do e-invoicing, because there will be no possibility to add data to the schema. It needs to come from your ERP. So anything manual that you have now in the process, that all needs to be automated to the furthest extent possible.
That's
so
a great point.
That's where
Julie.
the complexity is.
That's a great point, Julie, about manual processing, which hitherto has been outside of the, let's say, the main ERP environment. And normally at month end, when you do your return, you prepare your schedules, and you always go to that bit of the accounting environment, which you know is not included. And that's a really terrific point. Katja, I mean,
yeah, I was just
Sorry.
gonna say,
Sure.
in addition to the master data, is also the type of requirements that they have, you know, outside of the usual data like invoice, tax ID, and all that. That could be like sequential numbering, right? Unique identifiers, a QR code that needs to be included in the invoice. So some systems don't support that kind of you know, functionalities. So that could be very challenging. So other thing to take under consideration is that if you're invoicing to individuals, not to legal entities, right? Some countries have actually are implementing a different type of document for that, right? Like a receipt that you provide to your customers that have their unique XML schema. So that's something to take under consideration. And if individual, right, you're issuing an electronic invoicing, you don't have the ability with a paper invoice to actually hand it over to the individual. So do you need to start thinking about having a customer portal, right? Similar to digital services providers, right, where your clients can go there and download, right, the invoice. And the other thing would be your vendor portal, right? How are you going to receive your electronic invoices? It's not only issuing, but how you're going to receive your invoices. Do you need to put together a vendor portal, right, that has the functionalities to receive the data that your providers are issuing, right, on their electronic invoices as well.
Thank you, Mo. Just a quick question, just to follow up on Katja's point there. You've done a lot of work in the FATCA and CRS area for banks, and when we talked about this the other day, you talked a lot about CRM and how that forms part of the data requirements. And one of the questions we have had this morning is, you know, to the extent, for example, CRM data is required, how would that be factored in to e-invoicing?
Sorry, I was on mute. So the reference to CRM is an example of how some businesses manage their data. Some businesses will host financial data in the ERP and profile data of their customers in a CRM, marketing data and things like this. And eventually on the invoice, you have to probably extract from both, so you're able to issue the e-invoice or prepare the e-invoice. If you don't have a CRM, then you don't have a CRM, as simple as that. You need to see whether you host that data somewhere or not, and if not, then you need to collect it. And maybe one of the solutions, if the gap is big, is actually to establish a CRM that will read and feed to and from the ERP, so you're able to issue e-invoices. It was just one scenario of many mentioning the CRM in there.
Okay, thank you. We've got a question for maybe Katja can answer this. I mean, the question here is, when do we expect this schema from Gazette? And I think we're expecting it before May the 4th. But maybe I'll say to Katja, if you're going to implement an e-invoice solution, what's the latest you should have that schema in terms of, you know, from receiving that to go live? What is your kind of outside time parameter?
That's an excellent question. So ideally, the sooner the better, right?
Sure.
But usually, depending on the requirements, right? If we're talking about just electronic invoicing without any other document, that I doubt it, right? I'm talking about credit notes, debit notes, etc. I would say that you should allow at the minimum 9 weeks, right? Just to make sure that you select the correct solution, that you do the data analysis, that you set up your master data, and then things, you know, can add on to that. It's going to be one single legal entity. What about if the client has 5 legal entities, right? With different kind of services that they're providing or different kind of goods that they're selling. So that will definitely impact as well. And I'm saying at least, you know, 9 weeks, because you need to test the solution, right? You need to identify the gaps. And in addition to that, you need to figure it out a way to receive invoices from your vendors. So it's, again, it's not only the issuance of the invoices, also how I'm going to receive, you know, the invoices, and how I'm going to push that data, hopefully in an automated process, into my ERPs and financial systems.
That's a really great point, because one of the questions we were asked also was, will we be able to reject invoices from suppliers if they're manual? I suppose the answer to that question is, well, if the law is that it should be electronic, then that means Gazette's going to test to what extent the electronic invoice issued by the supplier matches whatever process you kind of put that invoice through to onboard it into your ERP system. So the danger is that you receive a manual invoice, and that's no longer a valid invoice from the law, legal point of view, in which case your input tax recovery could well be jeopardized. So as Mo said earlier on, it's a major disruption to your processes, both on the sales and purchase side. Sorry, Mo, you were saying.
I was going to say that if you're receiving invoices manually and you're booking those through your finance department, without these invoices going through the Gazette approval process, when you submit the return, immediately they will know there's a difference between your return and what they have as a draft reconciliation for you. So expect an inquiry really fast.
Yeah, I mean, one of the things we're not, at most totally right, one of the things we're not absolutely clear about is just how sophisticated their monitoring will be. But, you know, clearly this is what is required, and any deviation is going to cause a problem. A couple of additional questions on when we have
having an IT engineer on the head of Gazette, I think the sky is the limit.
Sure. So one of the questions I asked was, when will we have clarity on whether B2C would be subject to E-Invoicing? At the moment, it is. So the question is, are they going to back off of that for the time being? And at the moment, we don't know, unfortunately. Another question we have is, you know, in terms of the simplified invoice, will that be subject to E-Invoicing? And that's essentially, you know, the B2C question in another form. At the moment, the regulations simply state that the invoicing regulations are integrated effectively with the VAT implementing regulations. And so all the requirements in terms of what should be on a tax invoice, when a tax invoice should be issued, will follow. And that at the moment, although that requires Arabic versions of invoicing, we're hopeful that requirement may be put aside, because I think that could be quite a tough ask. But definitely all supplies which are ordinarily subject to a VAT invoice, which includes zero rating supplies, that's another question that was asked, have to be invoiced using the electronic platform. Sorry, Julie, were you going to say something?
Yeah, just wanted to add that because there were a lot of questions on how to manage the B2C electronic invoicing. There are a number of countries that do require B2C electronic invoicing, but they do allow basically less of a schema to be transmitted for B2C supplies, because in effect mirroring the simplified invoice, because you do not need the address and all of the details of your customer if you are in a B2C situation like at a hypermarket. But you most probably will still need some kind of an ID of your customer, being, say, their email address, where that electronic message can be sent. So again, we can now only look at what other countries are doing and what the requirements are there. Obviously, we'll need to wait for Gaza to tell us exactly how they see the process, but it's not something completely new that they're introducing, and I'm sure they're also looking at other countries to see to what extent they will take their own regulations.
Thank you. Just maybe a final question for Katja. When it comes to local versus remote hosting of e-invoicing solutions, we know Saudi has very strict laws on what data can be essentially hosted outside of this country. And so you mentioned the possibility of like web hosted solutions, but we see that's a potential constraint in Saudi, certainly at the moment. Have you come across that before? And if you did, how was that problem solved?
So it will depend on, there are countries like mainly Latin American countries, right? They have a specific regulation on data retention and where the data is housed, right? So in case of an audit, even when in most of Latin American countries, they have implemented electronic invoicing and they do an electronic form of tax return, they are required to have all the financial data in the fiscal address of the legal entity, right? So that means in the actual offices where the legal entity is established. So they have, in most of the countries, they have implemented ways where that data will flow right to the cloud. Right now, when you're referring to electronic invoicing solutions, right, that's where the data is stored. But the electronic invoicing solutions, so most of the countries require, right, the providers of those solutions to be legally established in the country.
Okay. Okay. So, all right. So you would anticipate that the actual data itself will be stored in country, even though the solution may be hosted on a web basis.
Yes, that's what we are seeing, right?
Thank you. There's another question that's come up. Let me just clarify. In terms of e-invoicing, it only applies to VAT registered and resident businesses in Saudi. If you're non-resident, you don't have to comply with this this requirement. And just in terms of the simplified invoice, someone has asked us just to repeat it. What Julie was saying is there are likely to be two schemas: one for a detailed invoice, which is more B2B, and the simplified invoice for the retail environment, which will have less data requirements. So that's the point we were making. And then finally, the archive retention period for documents in Saudi is 5 years, if I'm not mistaken. But what's interesting, and it's a really important question as to whether that may change, given a more digitized approach. Okay, so I think we can call it quits there. Really, I'd like to thank the presenters, Mohammed, Katja. It's time for bed, I think. Katja, thank you. Julie, and obviously all of the attendees. We really appreciate your time. It's been a really kind of interesting and enjoyable session for us. We will make a limited version of the slide deck available after this presentation. And by all means, should you require any assistance from us, please don't hesitate to contact any other presenters or indeed your usual contact at KPMG. I'd also like to thank our marketing team, Renee and Claire, and Allah from Saudi for all their help in setting up the webinar. And I wish you all a pleasant day further and look forward to to chatting again soon. Thank you.